Chaarat Gold is a gold mining company with assets at various stages of development in the Kyrgyz Republic. It's been through many changes these past few months, and I'm delighted to be joined by the Chief Financial Officer, David Mackenzie. So, David, first of all, us headline writers loved to describe Kapan as the cash cow for the company, but it's been sold. Kapan in Armenia has been sold. So was it purely down to the appreciation of the Armenian dram? Because it was security for the company and now it's gone.
Yeah, hi, Sarah. Yeah, exactly. Look, whilst Kapan was a good asset for us historically, providing funds to progress the company's wider strategy over the last few years, we've had a couple of factors that really came into play. First of all, we had an intention to go into Armenia to grow the company. We were looking at the Amulsar asset for a number of years. However, after spending many years progressing this purchase, we couldn't close out the transaction with the creditor owner because they wished to pursue other options. We had a significant amount of work conducted on this transaction, fully financed, fully documented deal, but it just didn't go forward. So then we're left with one asset, one project in Armenia, and that had, some macro environmental factors. As we all know, the FX rate strengthened against the dollar quite surprisingly. And in terms of the investment, in terms of management's time, cash to keep that project going, it was just deemed not worth it compared with our Tulkubash asset, which is FID ready and ready to go.
Okay, I'm going to push you a bit further though, but why divest from your income producing asset? To me, it sounds as though it's desperation.
Well, I think you've got to look at what income producing asset actually means in the bigger scheme of things. We had an asset that did have debt. Its EBITDA had decreased significantly. We were looking at Kapan at a 20 million EBITDA per year type mine. That's now gone down to below 5 for an annualized basis. If we were to really reinvigorate Kapan, it would mean significant development expenditure and just significant time and effort. And, we just really want to refocus on the Kyrgyz Republic, where we have a world-class asset to focus on.
Okay, so we'll come to that. So with the sale of Kapan, you've got money in the coffers. You brought up debt there. So what's the debt situation like? Is it manageable?
Well, since the sale of Kapan, we've got a very simple debt structure. We've got a bond at the head level, group level, 35 million. And we also have a working capital facility in place, but we've only drawn down 2 million of the potential 5. So looking at those two items, the bonds, they were rolled forward to the earlier of the financial investment decision of Tulkubash by the board of the directors, or 31st of July. This gives us a good 9-month window to proceed with the Tulkubash FID. It's a really good sign from the bondholders who originally rolled it forward for 3 months recently, and now we have an additional 9 months. So we've got that headroom to go after Tulkubash and get that done during this next 3 or 4 months. When you look at the working capital facility, this was provided by our largest shareholder and chairman, Martin Anderson, via Labro Investments Limited. It also shows a really strong view from our chairman that he's very optimistic about the company and proceeding with the Tulkubash investment. So, this gives us room and headroom to get this done in the next 9 months.
Okay, so I'm assuming that the Tulkubash Gold Project is this world-class asset that you're alluding to. So in the previous regulatory news statements, it talks about having new contracts for the construction of Tulkubash. I'm just wondering, what is the relevance of having a fixed price contract for construction if you haven't secured funding, or is that funding going to be debt?
Well, first of all, we've got to look at what we've signed. So what have we signed? We've signed an $83 million fixed price EPC contract with Power China. That is the majority of the Tulkubash development costs. This removes a lot of funding risk and project delivery risk in general because it's a fixed price majority of the EPC contract. In terms of what benchmark that was against, we had $115 million CapEx cost in our bankable feasibility study completed in May 21. So 2 or 3 years ago, a lot of inflation, and we've come 9 million under that CapEx estimate. So it's a really good result to have this EPC contract locked down and ready to go in this inflationary environment underneath what we currently had forecast. What we've also signed with PowerChina is a mining and O&M contract for 5 years, which is 170 million. So now having PowerChina for both construction and operational phases, it just gives us a full service solution. Once we've got that funding in place, we're ready to go. Now, you did ask about the funding and why are we signing these contracts? Well, you have to have a look at what PowerChina is. PowerChina is a publicly listed entity. It's ranked 105th amongst the Fortune Global 500 companies. It operates in 130 countries. It's a massive company. And this is important for us because they have deemed our project worthwhile of spending 6 months at site working through a detailed contract on the basis that it is still conditional on financing. Now, they wouldn't have spent all of that time if they didn't believe this project was imminently able to be FID'd and proceeded with. So that's why we're very happy with where we've got to with PowerChina, and it's a very big stepping stone towards getting the financing.
So are you rubbing shoulders with resource giants then?
Well, we do have one of the biggest companies in the world there for our construction partners. That gives us a lot of, how would you say, introductions to maybe some sources of financing that we didn't have in the past.
So I'm just wondering, what is happening on site now? There's lots of paperwork flying around in the ether, but what's happening now? Boots on the ground. Talk to me about pickaxes and shovels, although your production methods were never like that.
Yeah. No, well, firstly, we've had 180,000 meters drilled in these resources over the past 20 years. So, we know what's in the ground, what's actually happened and what's, on the ground, as you could say. Well, we've completed the access road to site. We've got a 160-bed camp facility. Engineering's in the final stages, and we have a haul road that's 70% complete. So the project's well advanced, and we'll be able to progress very quickly once funding is finalised. This is a FID-ready project.
And when do you think funding might be finalised? What's the hope?
The hope is we would be finalising financing in Q1 24 at the latest. We are an elevated site. It's, above 2,000 meters. We need to get in there during summer. So, that is what we are looking at right now and working 100% on, is getting that financing in place so that we've got an FID in Q1 24.
So you and I haven't talked about Kyzyltash. When I've spoken to previous iterations of management, they've been talking about the pathway to production for the Kyzyltash sulphide deposit. They described that as the biggest value driver for the company, the crown jewel within the portfolio. So what's happened there?
So it is still the crown jewel. However, we have to remember that Tulkubash and Kyzyltash are on the same license. So, there is a lot of shared infrastructure when you go through these projects. Firstly, getting Tulkubash completed will give us that infrastructure access, etc., for Kyzyltash. Kyzyltash, we have focused on in 22 on the metallurgical testing to figure out our processing route. Once we have our processing route, which is the current focus, we will move ahead to a feasibility study. And then we will look to parallel track Kyzyltash feasibility study during the construction of Tulkubash, with the view that as soon as we're finished with Tulkubash construction, we are very close to FID and Kyzyltash to then flow straight on to Kyzyltash. And it has to be remembered, Tulkubash is 95,000 ounces per annum. Kyzyltash will be 300,000 plus.
Okay, so that will be exciting management. So new management, some old faces, but new positions. So the chairman is now sort of acting as the chief executive. You've been with the company for 3 years, but how does the board collectively feel about doing business in the Kyrgyz Republic?
Well, the board's very comfortable. Chaarat has been in Kyrgyz Republic for 20 years. We've invested over $170 million in Kyrgyz Republic. So it's not a new jurisdiction for Chaarat. It's probably a new refocused after the divestment of Kapan. We have top-rate local management team who are familiar with the environment, and they're able to apply our stringent conditions inside. And also the biggest string to our bow as Chaarat is we have a political, a stabilization agreement with the current government. And that has been held through a number of governments in Kyrgyzstan. It's been demonstrated by their continued support of our stabilization agreement of late. We have a very comfortable working relationship with the government, and it gives us the certainty around taxes and royalties that we're very happy to have.
So is refocus what the new presentation is all about? I'm just wondering why a presentation now. Presentations usually indicate a period of calm, or I'm just wondering what the takeaway is from the new presentation.
Well, I think it is a refocusing solely on Kyrgyz Republic. It's twofold that, if we want to conduct M&A or we want to build any additional mines, we're really focused now as a company as a whole and with the board that, our own assets have to be the benchmark. And, we've taken a step back, had a look at this and think, Tulkubash with the Power China contracts is our, focus now, because it is our most near-term achievement of going back into being a producing company, and also moving ahead with monetizing what is a great asset, Kyzyltash. We also see ourselves as massively undervalued in the market at the moment, and we want to ensure that we have the facts in the open with regards to how exciting our prospects really are, especially in light of what is a great gold price environment at the moment.
Right, David, so you've mentioned the word exciting there. However, your share price isn't exciting. Collectively, how does the board hope to energize the stock?
Well, first of all, there's the activities that we've just discussed, the progressing of Tulkubash, the monetizing of Kyzyltash, and getting ahead on that development pathway shows that we're really moving ahead with our assets in Kyrgyz Republic. We have divested our sole operating asset, which I think when non-knowledgeable investors come into and look at Chaarat, they think, why have you given up on a producing asset? Well, we may have given up on our producing asset, but what we're focusing on is an asset that has low AISC in Tulkubash. It has a long mine life when we get into the exploration departments, et cetera, et cetera. And, that really gives us a good platform to move forward as we build that asset over the next couple of years. But the simple answer for why our share price has, let's say, gone from 20p to down to the 5p region in the last couple of years, it's liquidity. We had basically, say, a $70 million market cap when the share price was around 15p. Only $30,000 worth of shares are being traded on a daily basis. And you can look at that as a low liquidity problem, which it is when the share price is going down, but we have a very supportive shareholder base, so that is quite tightly held. So, the volume is not available to be traded. But when we get fresh momentum going upwards, we also move very quickly in the north direction as well, which is great. We have looked at this as a board and as a management team. Recently, we moved to the Stock Exchange Electronic Trading Services, or SETSQX. That's to try and bring our trading platform into the best possible manner. And also, we're now out of trading halts because we're not involved in a lot of M&A activity. So we can actually communicate with the market more regularly and more openly than we have in the past.
And is this the end of M&A activity for Chaarat Gold?
I don't think we'd ever say it's the end of M&A activity. I think we would be focusing on Tulkubash first and foremost. It would have to be a M&A opportunity that beats that benchmark of Tulkubash asset. And I think it would also have to be looked upon as an asset that actually, combined with Chaarat, provides a way forward that is logical and sensible. That may mean looking in the regions that we're currently in, or divesting to a geographical location, but with a similar quality of resource and reserve.
Many thanks. David Mackenzie, Chief Financial Officer of Chaarat Gold Holdings. Thank you very much indeed.
Thanks very much, Sarah.